What is going on, guys? We got a trade recap today for Thursday, April 17th. I took one win and one loss today. The loss was a little bit smaller than the win. The loss was like half an R of a loss, and this was a 1.2 R win. We'll go over what I did wrong with the loss that I took. This win was just very, very nice stuff right here. Took this short. But we'll go over why I shouldn't have taken the loss, why I was able to mitigate my risk on the loss, and how I was able to catch this win right here. So let's go over my higher time frame bias. And the reason I ended up taking the loss this morning before the win was because the higher time frames were giving me a little bit of a mixed bias. Obviously, I was bearish, maintaining the bearish bias from yesterday. We had broken structure to the downside on the higher time frames. We are within this higher time frame 4-hour fair value gap, but I would have expected this to hold already and come up and take this daily buy side liquidity. Instead, we had chopped around here and then broken structure to the downside and started to displace lower. So now my external draw becomes this internal sell side liquidity within the 4-hour fair value gap. I'm going to delete the box here just to make it a little bit cleaner. So this is my bias. This was my bias yesterday, and this is my bias coming into this morning as well. And overnight, we had, or yesterday during the PM session, we had continued to sell off lower, and we had ended up displacing to the downside, opening up a 4-hour fair value gap right here. And this is what I wanted to see hold before I went to bed last night. We were like right here in price. I told myself I wanted to see this 4-hour fair value gap hold and then get shorts to the downside and targeting this 4-hour sell side liquidity. So coming into this morning, we had actually closed above this 4-hour SIBI on both. This is on NQ. If we go to ES as well, the 4-hour SIBI is right here, and we had slightly closed above it. So that being said, in my eyes, there's potentials to potentially target this internal high, right? Because this is the next prominent high within the range. In addition to that, we still haven't fully filled this new day opening gap. You can see on NQ, there's still a gap in price up here. So I was like, okay, I guess there's reasons to be potentially bullish to fill this gap. But then just looking at the chart, man, so I would rather execute off of fair value gaps just because fair value gaps are my go-to. I think they're a lot cleaner. They're a lot more clear and concise. That's just how I like to trade, is off of fair value gaps rather than order blocks. But we do have this 4-hour OB, which is actually holding price. Now, I would have loved to see this 4-hour fair value gap hold, but we did close above the 4-hour fair value gap, but we ended up holding this 4-hour order block. So you can see how I was a little bit mixed bias because we did close above that SIBI, but we are still holding that 4-hour imbalance. So I scale into the 15-minute chart, and I notice we have an SMT at the highs. Let me just delete this for a second. We have an SMT at the highs. NQ put in a higher high right here within the 4-hour order block. If we go to ES put in a lower high within this order block. So there's manipulation at the highs within the order block, and we have started to sell off from there and started to displace lower. So that's exactly what I want to see. If this from a 4-hour PD array, right? And this is still the market maker sell model. Now, where I got a little bit antsy was I noticed we had this 1-hour fair value gap, or 1-hour fair value gap within the range right here. Now, right when market opened, we had started to displace lower, and we broke structure on the 5-minute chart, on the 5-minute time frame, and we had opened up this big, so I don't know why I have it marked out right there. We had opened up this big 5-minute SIBI that I wanted to see price come back into, and get bearish reactions out of. Actually, it happened before this. Let me just go back a little bit more in price. We had originally opened this up right here, and we have this 5-minute fair value gap. I'm looking for a bullish fair value gap to be put in and have that inversed to the downside to take shorts. So we come up, we open up this 1-minute fair value gap right here. And if we continue in price, we also opened up this higher one, but I'd want to see both of these get run through. I want to see the lowest fair value gap in the range get ran through before taking a short here. So we continue. We don't actually close below it right here. I thought we were going to close this candle below, and I would have entered on something like this. And it wouldn't have been a good risk-to-reward ratio to this internal low. But playing it off of something like this, what you would do is you would enter as close to the inverse as possible, right? And you would have your take profit at the external sell side liquidity. And once price comes down and takes this internal low, your stop would just have to go to break even. So that's how I was looking to play this trade if we inversed this fair value gap right here. But on the next candle, you can see once we inversed it, we had also taken this internal low. So now there's no trades for me to be taken within this range, and I need to wait for more structure to form. So I'm going to put this one hour fair value gap back here. And I want to see more structure form at this point. Keep in mind my bias, like I would love to be bearish. It's just that closing above that 4-hour fair value gap really had me thinking a little bit too much. And I noticed, like I said, we had this 1 hour. Let me just delete all this. Boom, so I can give you all a clear picture of what I was looking for. So I'm like, okay, we already took this internal low with it off that potential 5-minute trade. We then come down and form an SMT at the lows. So we have an SMT at the lows here. We have fully filled in this 1 hour fair value gap, and we start to displace higher above this swing high. And we have now closed above all the bearish fair value gaps within this range of price here. We ran through that one, and we've displaced and broken structure to the upside. So I'm like, at this point, I'm like, okay, there's manipulation at the lows. We've already taken that internal low from the 5-minute fair value gap. We're still holding this 1 hour bullish fair value gap, and we did close above that 4-hour high time frame fair value gap. Yes, there's an order block. I don't really love taking trades on order blocks. And we have this data high right here. We had pre-market news. I think it was unemployment. You can correct me if I'm wrong in the comments. But look how irregular. I'm pretty sure this was a data high. If not, then there was really no need to be taking a trade here. Let me just make sure. Let me just look at the news calendar real quick. Okay, never mind. Unemployment claims came an hour before market opened. So 8:30 would have been right in here. So that's not even a data high. So honestly, the long wouldn't have, like, there's no reason to even be long here. But I thought this was a data high. You can see how, like, it's important, like, to stay on top of your stuff when you're trading, and to because I mean, this can happen to me, this can happen to you. It's easy to, you know, I don't even know what I was thinking, but I thought this was a data high because of how irregular the candle was, and it was pre-market, so I should have confirmed that. But if it was a data high, that's why I was bullish after we put in this SMT displaced higher and had that market structure shift, and we were holding this 1 hour time frame, this 1 hour fair value gap. So I'm like, okay, we have this, what I thought was a data high up here. We also have this new day opening gap that is still unfilled up here. We also technically closed above this 4 hour fair value gap, which I wanted to see hold pre-market. So that's why I ended up taking this long right here. Boom, we come up. I entered somewhere right here on this 1 minute. This is also an order block right here, stops below the SMT, and it's a nice 1.2 RR to that data high. and as you can see, we came up. We had originally, so this is where I put stops to I limited my stop loss because we had this 1 minute we were still holding, and at this point we've already put in multiple lows within the fair value gap. Let me just have to go back even farther. Once we put in this low right here and turtle soup the low within the 1 minute fair value gap, I don't want to see price, and we come back up to my break-even spot. I don't want to see price come back down below the swing low. This would be the turtle soup. In my opinion, this would be the turtle soup and the manipulation that would need to hold if we were going to truly continue higher. So at this point, this next candle, this was the turtle soup, and then we come back up and get a bullish candle reaction. So I moved my stops to above this swing low right here, and you can see this should be the turtle soup, right? And this would then be the protected low. The manipulation within the 1 minute for value gap after getting these two bullish candles. So I moved my stops up to above the swing low here. I was also kind of questioning the trade, and then we can come back down and we stopped out for essentially half a loss. So now, also one thing I need to be better at is pre-market. I literally typed out that go to my pre-market notes. Literally typed out that although we closed above 4-hour SIBI, the bearish order block, I need to be bearish until the 4-hour order block. Oh, sorry. Although we closed above the 4-hour fair value gap, I need to be bearish from the 4-hour order block until we have 15-minute displacement above the highs. So something like this on the 15-minute chart. Then I could flip bullish from that point on to target this gap up here and this internal high. Like I said, if I didn't think this was a data high, then I would have had, there's no way I flip bullish here. So that's honestly, that's literally on me. I thought this was a data high. Without that, there would be no reason to even be taking a long to this high here. We'd have to wait for that displacement, like I said, to then flip bullish on the 15-minute time frame. So that's what I had written out, and that would have saved me from that loss. Once again, it's important to make sure that what you're looking like, the data, your reasonings for the trade are actually valid, because that's not even a valid data high. That's not a data high. So there's no reason, there's no pool of liquid. Like, long story short, shouldn't have taken that long right there, and the higher time frame bias is still short, is still bearish. Reacting off of this 4-hour order block. You know, sometimes the market isn't always going to give you exactly what you want to see. Sometimes, you know, we did close slightly above this. We're holding the 4-hour bearish order block, and we still have bearish order flow. So then I notice, after getting stopped out of that for a slight loss, we still have this 5-minute bearish fair value gap that we did slightly, ever so slightly close right above, but in my eyes we're still holding it, and we came up and put an SMT at the highs. So if we scale into the 1-minute chart, my bias is still bearish. That hasn't been, there's no reason not to be, especially after running through this right here. This was the last bullish imbalance within the range. This would be our inverse fair value gap. Boom. So we have that manipulation put in at the highs within this 5-minute bearish fair value gap. This would then be the CISD and this leg, price leg right here. This was the last up close candles before coming up and manipulating this high. We then closed below it. This would be the change in the state of delivery. And then we have this bearish fair value gap right here. But like I said, if there's two back-to-back like this, I want to see the last one in the range get run through first before taking a trade here. So we have the SMT, CISD, and I want to see that IFVG, the inverse fair value gap, to give me confidence taking this trade out of this 5-minute order block, 5-minute fair value gap. We then come back down, and we, on the next candle here, close below and inverse that last remaining fair value gap. So now, like, I can't enter right here because this is too close to the internal liquidity, right? Let me just make that. Obviously, that's too close. Stops. The protected stops are above this SMT high. So where can I enter here? Boom. The next closest PD rate. Maybe we get a pullback to that. This is the next closest PD rate, which is the 1 minute order block. I'm just looking for any sort of retracement to get in on the trade. So this is the order block here. And I have my stops up here. Once again, like I said earlier, this is my external target. These 15-minute lows right here. So yes, this is the internal liquidity, but what we can do is target this liquidity right here, and once we come down to this sell side, move stops to break even once we come here, and then leave my trade on until this external liquidity, which is my bias for the trade. And I only really have to do this on a 5-minute entry, because sometimes, you know, the 5-minute entry, waiting for a 1 minute confirmation out of a 5-minute fair value gap, sometimes there's simply just not enough room in the range once we finally get that inverse, right? But nevertheless, we come back up, tap the order block right here. I am now short at this point in time. And if we just advance in price, we continue to hold the order block, and we come down, take this internal liquidity. My stops are now at break even at this point, looking to see this this low get taken, and then if we continue in price, boom, we take that low, and I'm out of the trade. Now, with that being said, if I was in with one more contract, I would have loved to hold a runner, potentially down to this sell side down here, because of the fact, if we look at this manipulation, right, the SMT from pre-market, if we take the standard deviation of this move here, 2 to 2.5 would put us at that 4-hour sell side liquidity. If we also take this manipulation leg from this SMT, standard deviation of that puts us right here at this 4-hour sell side. But I simply can't hold on. If I have one contract here, right, and it was based off of this internal model, I simply cannot hold until past this this liquidity right here, which I know is given, is what's most likely going to be taken. So that was a trade right there, and that wraps up my trading day. This was a pretty good trade. I just wish I would have stuck to my higher time frame bias, and that's where I can improve on today. There's always room for improvement, right? But the entry model and the reasonings for this trade, like if we have an SMT, we have a CISD, we have an inverse fair value gap, there's no reason not to enter, especially when the higher time frame bias is going and aligned with this. If we take a loss here, then we just take a loss, and that's okay, and we just pack it up and we go on about our day. There's no problem with that, because this is my model, and you have to feel the same way about when you're trading and your model presents itself. You have to be able to just simply take that trade and be okay with whatever the result happens. Whatever happens is going to happen. Like, you have to be content with that. And this is a trade I was so content with, and I just wish I would have stuck to my my pre-market bias. But like I said, I should have known that this wasn't even a data high, and this wasn't from news. And so if I would have known that, there's no reason to even be looking to go long based off of a 1 minute SMT, right? Because we're within the higher time frame bearish model, and we need to be bearish until this gets invalidated. So a little bit of a longer trade recap video, but that was the trade for me. It's looking like I'm done for the day, but it's looking like we're potentially respecting this 15-minute fair value gap right here. If we scaled into the 1 minute chart, what is ES looking like? It's tapped into this 15-minute as well. Is there any SMT or any manipulation at the highs? No, there's an internal sweep on liquidity. So there's no SMT yet, but I mean, if you weren't willing to enter off the SMT, we still have that internal sweep on liquidity. We have now run through, or now we need to run through this. And then this is so far down in the range, but maybe we come back up, manipulate this high, get that CISD down, and then continuation lower. Who knows? But it is PM session on basically a Friday. Tomorrow is Good Friday, so the market is closed and there's no trading tomorrow. So that's going to wrap it up for this week of trading, man. And so there will be no video tomorrow. Do not trade tomorrow because the equity markets are going to be closed. And yeah, man, pretty simple stuff. Good trade right here. So I appreciate you watching. I will see y'all in the next one. Peace.